Hey guys, Joe here from JCS-Charting. Happy Easter. This is what it looks like when big guys start to buy. You're seeing the smart money flow index of the S&P 500. This data is provided by wallstreetkorea.com. The smart money line is the red one here at the bottom, and this is April 7th, by the way. And then you see we experienced a huge increase of smart money to new all-time highs over just a couple of days. What happened at smart money over the last 6 months? We had an all-time high right in October. Then we had selling in smart money, which ended up in lower highs in December and in February, while the index kept making one all-time high after another until mid-February, and that ended up in a negative divergence to smart money. That ended up in that sell-off into April after big guys stepped in and were buying stocks like crazy. We're gonna have a look at the bigger picture of the S&P 500, the Nasdaq, and also check on the DAX. Let's hop into it. Okay, we jump straight into my Discord. This is a S&P weekly thread. This information is not for free. It's for members only, by the way. If you want to be part of it, you're welcome to join at www.jcs-charting.com. I got two packages there, basic and an advanced. I recommend to book the advanced. You see also my setups there. There are chat rooms where I participate sometimes in. You get stocks on request, Bitcoin, gold, and so on. As I mentioned before, this is a weekly analysis of the S&P 500 from the 4th of April, and I'm going to zoom in the chart in a little bit. What I said is the channel from above got clearly broken. Usually 100% duplication occurs right into the direction of the breakout. We got that channel right here, and the 100% duplication in the direction of the breakout is obviously to the downside. And I mentioned that the all-time high of 2020, before that COVID crash occurred, after we had that rally, that got back-tested with that decline in 2022. I think we thought that that low in October in 2022, we missed out that retest by 100 points, and that could occur right again, that we're going to retest the all-time high this time of 2022, and that matches the lower part of that duplication of that channel right here where I marked it in yellow. Here we got these two legs to the upside, these green boxes. We had a 120 increase right here, and here we had a 76% increase, but they were basically the same in price lengths. And then here are these two channels. By the way, we had a pop gun right at that boundary of that channel, and that pop gun went all the way to the downside to that all-time high, and we're gonna check out now at a live shot. Yeah, same chart, just to zoom in, here you see that channel, the 100% duplication to the downside. You see we made a perfect backtest of that all-time high out of 2022, which matched that 100% duplication of that channel perfectly. So all this was known in advance for my members. By the way, I stepped in here massively as well with buying, as also the institutions did. I bought, by the way, timing options, where price doesn't really matter at that time because you want to have the date right. That's how I do it. There are various different strategies you can use, but I won't go in with any certificates where you can get knocked out or so whenever you have volatility. such over 30, 40 or even 50. That is killing. By the way, we had also that pop gun right here that obviously popped to the downside. This pop gun on the weekly is on the JFD indication only. The pullback, which is still required, waits at 5559, by the way. And while we talk about cycles, this is mid-January, by the way. This is where, in my understanding, the last primary cycle ended and a new one started. That primary cycle topped out in week 5, which is already a bearish sign. We made a slightly higher all-time high. And then week 6, week 7, we broke that cycle start already. And that cycle turned in already a bearish. That means these cycles usually last between 15 to, they can last up to 24, 25 weeks. And since we saw that low here in week 12, that is very early. I mean, there are exceptions, but most of the time, because it fits so much better for a half cycle bottom, that means the low isn't in. By the way, as I said, there are exceptions, but I assume that we're going to see a half cycle top in week 14, which starts next week. My preferred date is the end of next week or the beginning of the week after for a half cycle top. And then I assume more selling into a second half cycle, because that whole primary cycle which started here is bearish, and I assume new lows into May or June. A quick look at the hourly chart of the cash market of the S&P 500. Here's that low of April 7th. We had that first impulse to the downside, immediate selling, another gap rally to the upside, which followed by selling, and then we had that huge candle into the close on April 9th, and after that the S&P is looking for a triangle consolidation, a symmetrical triangle consolidation most of the time. It looks something like that. Here would be the trigger point. Most of the time it overshoots and it pulls back into the triangle before they continue the trend, which is supposed to be up. I would like to see something like that to close that gap here at 5669. There's still a little open gap here at 5396, and this is here, by the way, also our mob zone 5500. Whenever that thing gets broken on the hourly close, that gives us a first hint. I prefer an H4 close or a daily close above 5500. That should open targets to 5681 to 5754 as our min target zone at the S&P 500. Basically the same for the Nasdaq 100 weekly chart here, cash indication. We also had that pop gun which pulled back already on the JFD at the Nasdaq, and you see here these cycle brackets which work in a very sync rhythm since 2022 actually. So that whole rally had or kept making the pullbacks into the same time period. This one here was a bit early. I assume that to be extended into May. Same structure, considering or talking about cycles. The primary cycle start was right here. We topped in week 5 and then we went all the way down into week 12 for a half cycle bottom, which fits the best right now. And I would like to see a 61.8 retracement at 49.30 of that rally, which started in October 2022. That would mean Nasdaq could retrace all the way down to a 61.8 retracement, which would be still a total healthy correction in that bull market. So far we have seen 16.322. That was a 50% retracement of that entire rally of the last 2.5 years. And we also have a quick look at the hourly chart of the cash market for the Nasdaq 100. Same structure as the S&P 500. That symmetrical triangle is also in the making. We are still missing that upper touch here to trigger that triangle. And then most of the time we see a little spike to the upside followed by a pullback, either to retest that trend line or to dive back into that triangle. Most of the time, it continues into the direction of the trend, which is up from that low. So we would see another leg like that to the upside, which matches our min target zone whenever 19202 gets triggered on the H4 or on the daily close. That means these targets here become very interesting, and that also kind of matches our target line of that bullish Elliott Wave wedge here shown in blue. The 61.8 retracement from the all-time high to that low also waits around that area at 20.05 for Nasdaq. And a quick look of the Dow Jones, also weekly time frame and the cash indication. We had that channel which wasn't really confirmed, or actually it was. We had 3 touches here on the upper side, 1, 2 at the lower side, and well, it got a little spiked here on the bottom, right in that suggested time zone 4 cycle low. It doesn't mean the low is in, it could dive a bit deeper. The Dow Jones corrected already 61.8% of that rally since October 23, and it corrected 50%. That is that retracement from the rally of 2022 to that all-time high. The structure could look a bit different here because we also could split it up into major cycles, but again, a half cycle, I haven't updated this one here yet, would fit a little better than the major cycles. Usually these primary cycles are split up into 3 parts, and the half cycle splits up the primary cycle in 2 parts, which would fit better. If we see another bounce and then come down for probably another cycle low. Yeah, and for the Dow Jones, we like to compare, or like to use a Dow theory while comparing the industrials at the top to the transportations at the bottom. And we compared the lows of 2023 to the latest low of April, and we noticed that the Dow industrials just retraced, we just talked about it, 61.8% of that rally, while the transportations went clearly below that low. That makes it a positive divergence considering the Dow theory, which means that is already a strong buying signals. But most of the time, keep that in mind, that signal likes to develop over days or even over weeks. I'm showing smart money again. This time it's a smart money flow of the German DAX. I'm showing that because it's actually behaving very differently than the US markets. See at that low of April 7th, and this is where we started to see massive inflow of smart money at the US markets, but we didn't see it all over Europe. We didn't see it there at all, neither at the CAC, at the FTSE, nor at the Euro Stoxx 50. There wasn't really any big institutional inflows at the DAX. There could be several different reasons for that. One could have been that we have seen a massive increase since the end of, or since mid-November of last year. We saw already that massive inflow at the DAX already, which ended up in a negative divergence here at the top. And we could see, or we could witness now, rotation from big money, big institutions rolling over from Europe back into the US markets. And we have a quick look here at the daily chart, etc. cash indication of the DAX. This is what I gave my members here, that red zone. It was the all-time high of October 2024. That was that line right here, and the bottom of that line is actually where the market turned. It was a 76.4 retracement of the rally we saw since August of last year to that all-time high. So DAX retraced 76.4%, which is usually the last exit sign for bulls if they want to turn that thing around. It also matched a very big retracement. I think it was a 23.6 of the weekly chart. We're going to have a look at that as well, but have a look at all these open gaps at DAX. We have basically the same open gaps at the top than at the bottom. And we had actually also a major trend line here in red, which didn't even get touched for DAX. So in case we run down again, watch that trend line. It connects the low of September 2022 with the lows of 2023 in October. That is a major trend which needs to hold for DAX in order to run higher again. And here is that weekly chart I just talked about. It's a log chart, so it compares the percentages. It's not a linear chart, so keep that in mind. We had a very clean rising channel here with 1, 2, 3 confirmations at the downside and 1, 2 confirmations at the upside. We had also a very nice 9 count, which ended up in our turning signal with that all-time high. I think DAX made that all-time high by 1 bip higher. And then we started that sell-off and we broke that channel, but the weekly close was actually well back in the original channel. That doesn't mean we could break that again and run lower. What is interesting here, we talked about that duplication. Once these channels break, they like to do the duplication to the direction of breakout. We saw that at the S&P 500. Now we got that channel here at the DAX, and that would actually mean we run much lower into the 16,000 area if that channel really gets that duplication to the downside. I talked about that 23.6 retracement. That is a 23.6 retracement of the rally which started in 2009. So that is a low of the financial crisis all the way up. So DAX has retraced that by 23.6%, which is still a very bullish retracement. I rather would see a 38.2 retracement, but in order to maintain our count valid, it better stays here. And then we could actually also say that decline was also just a retest of these all-time highs from May of 2024. And this is the last chart for the DAX. If you want to see more also about our latest Elliott count, the big one actually, which started a couple of years ago, you're welcome again to join our Discord at JCS-Charting.com. This here is a 4-hour chart, etc. Cash indication once again, and we have a triggered so-called cup and handle. So we have a neckline right at 23,300, and this here is our cup, and this here is our handle. It triggered right here for higher targets, which are shown in my channel as well. 22,227 is the mob for DAX to run higher or being rejected over the next few weeks. Yeah, that's about it. We just talked about the US market and the DAX. I haven't recorded a video for quite a while, for the last few weeks. I had some family issues. And I try to do that more often, but I can tell you already in the next few weeks I won't be able to record videos on that regular basis, maybe once a month, but I will keep my members updated. I wish you all a happy Easter, and I would be happy if you leave me a like, a thumb up or a nice comment. I see my members on Tuesday. The US markets are already open for tomorrow. I might do some updates in the afternoon, but I'll be busy tomorrow all day long. And I see you back on Tuesday. Enjoy your weekend. Thank you for watching. Bye-bye.